Welcome to the Transparent FX Academy. My name is Nick and I'm a top hodler on TradingView. And as a top hodler, I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now, without wasting any more time, let's get straight in the charts to see what kind of good trading opportunities we can be finding today. The pair that I want to speak about today is Euro USD, which is the most traded pair in the market. And the reason for which I want to speak about it is because it is very near to providing to us a very good trading opportunity that obviously we can be capitalizing on. So I want to perform this full analysis explaining exactly the situation that we currently have. And as usual, I will keep the analysis as educational as possible so that you will learn exactly what you have to be looking for in the market when you are scanning for opportunities, and in general, when you are developing a proper profitable strategy. So let's get straight into the video. First, I will be speaking about the technical side of the market. We will then go and see what we have from an order flow perspective to see what hedge funds are currently doing in the market. And obviously, if you're able to position yourself with this smart money in the market, you have an advantage over your competition in the market. And by the end of the video, you will know exactly what kind of opportunity we can be looking for at the moment on Euro USD. Now, starting from the monthly time frame, what do we have? Now, from a monthly perspective, we have a market that currently has created an overextended W formation. We have an impulse to the downside, retracement, lower low, and higher high that broke above this high here, which is the first leg of the pattern. Now, when you see a movement like this, impulse, correction, lower low, and higher high, this is an overextended W formation, after which you expect the market to make a move to the downside to go and retrace at least to the 0.382 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is exactly this move here. So if we want to understand our target to the downside for this retracement, we have to take our Fibonacci from the low to the high of this impulse. And what we can easily identify is that the 0.382 is currently at this level here. So we expect the market from a monthly perspective to provide a deeper retracement to this area here, which is the 0.382 of the Fibonacci taken on the monthly impulse. Going down on the weekly, what do we see? Now, on the weekly, we can see that at the moment we have a market that had provided an extremely strong bullish trend. We had a very strong impulse to the upside followed by a retracement and again a huge continuation to the upside. Now, if you are asking yourself, why did the market create this huge uptrend? The reason for it is that hedge funds were aggressively buying Euro USD. So the smart money in the market was aggressively buying Euro USD. And we see this, and we can see this clearly reflected in the COT data. In fact, if we look here, we went from having minus 114K net positions, so way more shorts than longs, with 271K shorts and only 157K longs, to having the completely opposite situation, with 211K net positions, with 262K longs and only 50K shorts. Now, actually, let's get the COT data directly on the chart so that I can easily show you what is going on from a price action and an order flow perspective. So here we can see that hedge funds have added already a lot of longs, huge move to the upside. This was when net positions were increasing and increasing. Here they shifted from negative to positive with finally more longs than shorts. And then it just went increasing and increasing and increasing all the way to reach 211K net positions, and the market continued to the upside very aggressively. And in fact, that is exactly what we expected. And if you remember, I made a full breakdown of Euro USD when the market was here, in which I explained all the reasons for which from here we first wanted to see a retracement exactly to this area here. And then again, when the market was here, I made another breakdown explaining all the reasons for which from here we wanted to see the continuation to the upside, as clearly hedge funds were longing the market. And that is exactly what the market did. And by the way, I will link this previous analysis in the description so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. But when the market reached this area here, what did we have? We started to have some profit taking. In fact, what we can see is that clearly hedge funds started closing their longs. We can see 11K longs close here, another 17K longs close here, another 10K longs closed, another 5K longs closed, another 3K longs closed. So clearly around this area, this is a profit-taking zone for hedge funds, in which they are taking their profits and exiting their long positions. And in fact, we did expect some weakness, which is exactly what we are currently seeing. However, in the long term, we can clearly see that a lot of longs have been added. So in the short term, we can expect some weakness, possibly for a deeper correction, as we have already seen on the monthly. However, in the long term, we know that hedge funds have added a lot of longs on Euro USD. And at the moment on the weekly, from a technical perspective, what we can see? On the technical side, we can see that we had an impulse and a correction. And the correction was exactly to the supply that the weekly time frame had created here. In fact, in all this impulse to the downside, there is one candle which is not related to the move, which is exactly this green candle here. And the market went and tested exactly this supply before starting the rejection to the downside, which is exactly what you expect when the market reaches a supply area. Going down on the daily, what do we see? Now, from a daily perspective, situation is quite clear and also very interesting for a potential trading opportunity. In fact, on the daily, what we can see, first, the market created this overextended M formation. After the overextended M formation, what did we want to see? We wanted to see the market create a move to the upside to go and complete the pattern at the previous support, now to resistance, and also at the supply that we had from a weekly perspective. And then from there, we expected the continuation to the downside. And that is exactly what the market did. And I will link also this previous analysis in the description, so you can go and check it out for further reference and more free education. But at the moment, what is the situation now? At the moment, the market is creating an M formation from a daily perspective. In fact, we have an impulse, correction, tried going higher and failed and broke lower. Now, after an M formation, what do you expect? You expect the market to make a move to the neckline to complete the pattern at the previous support, which is now turned resistance. So from a daily perspective, what we actually want to see is the market to create a move to the upside, or at least we want to see the market reach the 0.382 of the Fibonacci taken on the daily impulse. Now, in general, can we expect Euro USD to show strength? Now, as we have seen, even though in the short term, we did have some profit taking, and now with the new reports, we also see that hedge funds have started adding shorts. That is true. However, what we do see is that in the long term, we had a lot of longs. So the market can easily complete this M formation at least at the 0.382 of the Fibonacci taken on the impulse leg. So a completion of the M formation before the continuation lower is definitely possible. So actually here we have two opportunities, not only one, because we want to see a move to the upside in the short term, but a continuation to the downside and a retracement to the 0.382 of the monthly in the long term. So how we will be approaching this kind of opportunities with students. Now, as usual, monthly, weekly, and daily combined with the COT data are the best timeframes when it comes to the directional aspect of the market. But when it comes to confirmations and finding good entries with a minimum 1 to 3 risk to reward, the best time frame is the 4 hours. And at the moment on the 4 hours, what do we have? Now, on the 4 hours, currently, we can see that the market is moving in an extremely bearish trend. The market is creating lower lows and lower highs with very strong bearish momentum. So at the moment, absolutely, we cannot be looking for any kind of longing situation because the market is clearly in a very strong bearish trend. And how we will be approaching this situation, a situation in which we want to see a move to the upside. However, we have a bearish market. Now, actually, the more the market will remain bearish, the better it will be. Because the more the market will continue the move to the downside, the better the risk to reward will be, and the number of pips on which we can capitalize, it will be better. So the more the market will go to the downside, the better it will be, because when the move to the upside will start, we will have a better risk to reward, better probabilities, and a higher amount of pips to be capitalizing on. So the way in which we will be approaching the market, as usual, is being reactive and not predictive. During the move to the downside with students, we will be monitoring price action from a 4-hour perspective, and we will be waiting for the market to shift from a bearish market as it is right now to a bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point we will add Euro USD to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward, and at that point, very good probabilities for the move to the upside and completion of the M formation, at least at the 0.32 of the Fibonacci taken on the impulse leg. And then we can expect a continuation to the downside, but that is something that we will be speaking about after the market will have given us the daily retracement that we want to see in the first place. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profits, as well as having me answering personally every question that you have every single day. So I really suggest you go and check out the program. The link is in the description, and I will see you in.